The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here on this Tuesday, the 17th of January, and we're looking at the Dow down 137 at 34,165. Let me just do this because the beginning of the week, it is going to be a shortened week, but the beginning of the week. This is leg D. In the Chapman wave methodology, we're always trying to identify the lowest low bar and then have every higher peak counted alphabetically in sequence A, B, C, D, E, F, G. But it's at that fourth highest peak, peak D, that other things can happen. And I was anticipating some kind of a pullback. Now, it's interesting that from Friday, I've been anticipating some kind of market pullback. And when I did my hour-long video overview for subscribers to my opening call on Saturday, I always do one every weekend. It goes from between 40 minutes and an hour. Just trying to look at everything, saying how we're trying to build up a portfolio, what we're looking at, what are the sectors that are weak, what are the sectors that we are trying to get into, what's working, what's not working, etc. So within that context, my anticipation was that I didn't want to do anything in the Dow or the U Dow 3 times long. We've already had some really good positions, taken a little bits off for money management, but I didn't see any pullback here that was very sharp coming, but I did expect some kind of a digestive moment. And then when I looked more and more, remember Friday I was talking about how strong the Russell 2000 was, and that I really want to see the semiconductors together with that's the SMH ETF, together with the QQQ, but preferably I want to see the small caps start to take on some strength, and we'll see if there's going to be a rotation over the next couple of weeks, whereby money starts to filter into areas that were kind of taboo for quite a while. Okay, so with that said, look, the MACD, this is the daily chart on the left, the weekly chart in the middle, monthly chart on the right. This is the Dow. Look how strong it's been. Look how strong the technicals have been, and there has been a commensurate rally with the price. The only thing is that at 94% in the stochastic, I would have liked to have seen the Dow a little bit higher, probably above the 34,712 high of the 13th of December, that peak E high. But that's okay. And within that context, I've been talking about this inside track repellent zone. We're above it. It's now a support zone. The 14-period moving average, the black line, the weekly, that's been support. The MACD is strong. Stochastic's good at 82%. On-balance volume is kind of lagging. Same with the daily chart. On-balance volume is not that great. However, look at this. The monthly chart, and we have less than 2 weeks to, is that right? 2 weeks, today's Thursday. Tuesday. So Tuesday, yeah, we've got exactly 2 weeks to go to the 31st. And what we're looking at is within the context of the monthly chart, you have an L, meaning that the 9-period moving average has moved over the 14. That's the first time in quite some time. And that is important, but it's a monthly chart. I have to wait for the 31st before I can really say, hey, that's a really good sign. However, look at this. The S&P daily chart has now gotten even stronger. It's up 12.5 at 4,011. And that says to me that the rotation, whereby you can see the stochastics at 95%, on-balance volumes, okay. Look at this blue, the grayish relative strength index in the daily. That's improving. The 200-period moving average of 39.95, I think it is a magnet. It's hit it 3 times, Thursday, Friday, and then again today. Let me just look at the YM, which did trade on Monday. For those of you who are around, who were doing some trading on Sunday night into Monday at 1 o'clock. And then it started up again, the futures at 6 o'clock last night. Yeah, it's a little different, but very close. That says there's a chance that we've got a peak D here. Yeah, the technicals are all the same. So let's go back. Now I want to look at the QQQ, because why? The QQQ needs to find strength, and it needs to find strength so that at some point in January, preferably in January, it's got 2 weeks to go, it starts to close a good few times above the 296 resistance level of the 200-period moving average. It hasn't been there. I don't want to go back. Let me just drag it across like this. It hasn't been there since the top in August at 334.42, that doji candle peak G in the Chapman wave. Now what we're looking at is there is strength. I like the fact that we've got rotational strength here. I want to see that. It's really important because it means you get high-level consolidations taking time to resolve a little bit of an overbought situation, say in the Dow, while some of the others that have been lagging can continue higher. And that's what you've got. But it is a leg D in the daily chart in the QQQ NDX 100 trading vehicle. And that to me says you don't want to make a peak D underneath that peak F at 296 on the 13th of December, because that just says, wow, that is weakness. But all the technicals are positive. The 9 could be, the unbalanced volume could be a little bit better, but it's okay. And relative strength is improving. So I'm inclined to think that there's a chance that we've got a little bit of a V-shaped pattern in the daily chart. And that says that the weekly chart hasn't yet, like the S&P, hasn't crossed above the inside track repellent zone in the weekly chart. That it just says you not only need to see that, you've got to see closes in January. I don't want to go to February. I want to say January above 296.88, the high of the 13th of December. You want to see that it's not a cup, it's more like a V-shaped formation, powerful, and that's going to help the monthly chart. So that's the weekly chart, still hasn't gone above the inside track repellent zone. Watching that. IWM, as I said before, the IWM is the Russell 2000 small caps, nicely above, just above the inside track repellent zone, but way above the 184. It's at 187.52, up 47 cents. I would just certainly say way. It is nicely above the 200-period exponential moving average. It's done that before and then failed. Got to watch this closely. But for the first time, I can say that is so nice to see. This is the second week above the Chapman wave inside track repellent zone, but the week has only just begun. I don't want to see a break underneath 181. At this particular point at 187, it says, you know what? I'm rotating through the different sectors, and now the IWM can start to see a better move, but that monthly chart needs a lot of work. All right, I'm done with all those. Now let's go to quickly the SMHs. SMHs leg D, this is now leg E in a cup formation, and that is a good sign, but it's using up a lot of upside power when you're looking at the notation, being in an E way below the D that was made at about 232. Let me just double check what that was. 234.59 on the 13th of December. So I'm pleased to say that the semiconductors are now participating very nicely. I like that. That's really important. Let's go to the gold. I want to show you something very interesting. Gold made a new, did it make a new recovery high today? 1931.8? No, it didn't. 1931.8? Yes, it did. It doubled. So far, it's an exact high. And in leg E, and the technicals are still very strong, but the on-balance volume, which was overbought, as I mentioned on Friday, is pulling back. There's a little bit of a digestive mode, and it's only leg C in the weekly chart. That is still very good action in gold because the dollar did not rally. I want to look at silver before we move on. Just want to get this out the way. Then Jason and Jane and all those people and Greg that emailed me, I'll answer.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back, and I just wanted to talk about this. I had a question in the den. I want to get to it right away. I did mention it, but I didn't mention it in the weekly chart. I don't think I did. I can't remember now. The question is, could you please discuss the lagging on-balance volume on weekly, if that gives you a caution, and how to interpret it? So you see this on-balance volume, you see where it's lagging, you see where it's almost matching the price. It's almost like the stochastic. It doesn't happen very often, but it's like the stochastic in that it's matching the price movement in the weekly chart of the Dow. I am concerned. That's the reason why I'm saying I think there's going to be a bit of a breather. Maybe it's just more upside is limited just in the very short term. More importantly, you can see how well the on-balance volume works when it's successfully rallying with the price. Look at that monthly chart as it went to higher highs. Then it flattened out, market flattened out. Then it started to come down, on-balance volume came down. So yes, I am concerned, but the strength in the daily chart of the on-balance volume just recently is good, but it's still not as good as it should be. That's what I'm saying. So yes, I do consider it, and I consider it to be a weak link at this particular point in the weekly chart. Okay, so I just wanted to finish up here. So silver, I had a nice spike earlier on. Now it's down 27 cents at 24.095, and this is the continuous contract. I have this as a peak F. I haven't yet put a down arrow. I'm going to put more a question mark on it because I just need a little bit more evidence. Everything about it on the technical side says, except for the, right here, except for the 9-period moving average still above, and that's really important, above the 14-period moving average, there are a lot of signs that says silver is also about to have, in fact, silver, basically, if you know how I use the rectangle formation, silver's been in a consolidation all the way from late December. Yes, it's made slightly higher highs and slightly higher lows, but it's still within the containment area, basically between $24.50 and let's call it $23. So, and if you look at the PE in the weekly chart, it's done everything it needs to do to the left side candle that I chose for the cup formation. Remember, this is, you won't, I don't think I've seen this in technical books where you look at cup formations and they pick it from not a high, but they pick it from a particular bar. I pick it from a bar very often. This ugly bar of the 29th of April 24.56 high, 22.98 low. That's the candle I'm using. And I made this cup formation, and I made a left side, right side price time match. Remember, that's bar symmetry right to that low that was made on the week of the 2nd of September. Yep, 2nd of September at about 1798 or something. 1757. And we've got the number of bars to the left, to the right, matching. It hasn't broken above into the next ugly candle. That's the first week of September. That's the first week of April. No, the 22nd of April. So what we are looking at here is silver has had a beautiful move. Now it's this is what I mean by digesting. It's not breaking down. I don't think it's a short anything right now, but it definitely is digesting these gains. Let's just go back to gold, and I want to show you something else. So must have typed that in the wrong place. Let me just put it in here. There we go. Yeah. So gold has the same thing. It's done this left side, right side price time match, the bar symmetry. Let's see. I think it's actually a little early. Yep. It should have. Yeah. It has. It can go all the way to the 25th of January, but it broke out on the 12th. What was that date? Yes. So on the 12th and 13th, it spiked above the left side high. That was the high that I chose as my left side bumper that I take the cup formation from, or the midpoint. So that's on the 13th of June. So it's 6 months ago, right? June of 22. So 22, that's 6 months. So 7 months. And what we're looking at is, yes, it did that in a price time match. And now it says that once it's gone above, it could digest for a little bit. It's got 1891 and then 1875 as near-term support levels. I wouldn't be surprised. It could even go back to 1850s. But so far, the monthly chart is suggesting that it might take a little while longer. But when that 9-period moving average finally crosses positive, which should coincide with the MACD crossing positive, gold is going to have another big move up. So maybe it needs this digester phase, leg C, before it makes a peak C. That means it's still a leg. It has to wait until next week before it can possibly be a peak C, because we just double topped at 1931.8. I shouldn't say double top. We've just hit the exact same level of leg E. So this is still a leg E. So, and look, the stochastic is fabulous at 95% and flat. I love that. MACD's expanding still. The gold and silver are still doing very nicely. I wanted to show you high-grade copper. High-grade copper's pulled back earlier in the day. Now it's only down 0.02 at 419. I have this as a peak E, but if it starts to break out from here, I'm going to have no choice but to say this is a brand new move to the upside. That's amazing. Leg E in the week. I love to see copper moving like this because it confirms that whole thing I was talking about. You remember wood, the iShares Global Timber and Forestry ETF, having come off the low, was okay, but that's global. But if you put it together with high-grade copper, which is global, and you put it together with the HGX, this is the most fascinating period we've had in ages. Look at this. This is the Philadelphia housing sector index, up 86 cents at 435.98, up again today. Leg D, or is that now an E? Let me just see this. Yeah, this is a new E. This is a very quick D to E. Says, all right, you could be in for a little bit of a pullback here, but it's fantastic action. MACD's good stochastics at 95%. I love that. So isn't that interesting? And look at the weekly chart of the HGX index. Nice. Look at that. It's broken out above all the resistance points. Here's your left side, right side price time match. It took it out. And it's gray leg B. Gray only because I haven't got any confirmation of the technicals. There's only price that's moving. Price is the arbiter of a trend, but I need confirmation. So that's a gray leg B in the Philadelphia Housing Sector Index. I think I've covered most of what I wanted to do. Oh, natural gas. Natural gas. I didn't hold its gains the other. Don't type it on the chart. Type it in the little box. There we go. Actually, NG, which is natural gas continuous contract, trying to come off the low. it's the MACD starting to improve. I like that. The stochastics allows you a 10% on balance volumes improving. 9 is way under the 14. Wow, there's an incredible amount of work that has to be done in natural gas. All right, let's just get back to what I was saying before. So where did I put it? So Jason wanted to know about TX. TX. Oh, did I not finish the notation? This is, if I can ever read this. Ternium SA. What does Ternium do? I used to know this. Oh, it's got a break coming up. I'll do this as soon as we return. So Jason wanted to know about Ternium and SLX, which I discussed both Thursday and Friday. The steel sector doing so nicely. Copper, EM was a question of someone I wanted to know about. CLF, Greg, and IRM, another Greg, and Jay wanted to know about GIII, and I did Amazon on Thursday and Friday. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yes, SA does. So, manufactures, processes, and sells various steel products in Mexico. Okay, very good. So that's Ternium, SA, in Mexico, Argentina, Paraguay, Chile, Bolivia, Uruguay, Brazil, United States, Colombia, Guatemala, Costa Rica, Honduras, El Salvador, Nicaragua. Oh, wow. Okay, so it's doing very nicely. Now, I'm not sure whether this is an E or a B. Everything about it says this is probably a new leg B to the upside in the a new leg B to the upside in the daily chart. The weekly chart has got a leg B. The monthly chart made a peak D right in the 55s, pulled back sharply into the 26s, and now it is trading at 38. Yes, I like it. Now, I suspect that you're already in it, Jason, because you asked me a couple of days ago. But all I can say is that at 36.09, there's a really good chance that the whole 34.50 to 33.70 area with the 200 period moving averages is going to be very strong support. And that takes me back to the SLX, which I did the other day. The SLX is down 19 cents at 65.47. And this is the generic. This is the sector ETF for Van Eck Vectors Steel ETF. And still very strong. This is a leg C, so this kind of corresponds with what could be a leg B in the Ethereum. So I like it. I think this is very important. That's what I meant by that sector rotation. One of the reasons why we are in a steel stock is because I think that this whole infrastructure area is going to benefit. So that is important. Next question was EEM. I can't remember who asked me about the EEM. And this is important. Isn't that fascinating? It's almost like the same chart formation. So EEM is the emerging market. Weekly chart is in leg C. Let me just put an up arrow because the MACD is good strong. And so this is all looking very good. And I must say, Dudette, I'm with you in that particular situation, and I'll talk about it in a moment. And we'll just see, it could be temporary, but we need to see follow through to the downside in that position that you just went short. So let's just go A, B, C. This is a D, pulls back and goes to an E, then starts over again and goes peak A, B, that's a higher high, C, and it's in D. So emerging market is above the 200 period moving average. I think it's also going to have a little digestive phase here, but everything about it is technically really good. I like it. I just think maybe a little breather. It's at 40.90. It could test the 40 to 39 area. Just emerging market. It is in a buy mode in the daily chart. No question about that. Just a question here about platinum. Yeah, platinum, PL. Is that palladium or platinum? That's platinum. Made a peak F right at the resistance, the Chapman Wave inside track, the repellent zone. I think I spoke about this on Wednesday of last week. I know that I'd done work on it, but I don't know if I actually mentioned it out here. Look, there's a repellent zone, 3 quick moves to the upside, and bam, comes down. So this kind of fits everything we're looking at here. A little bit of a break. Platinum continuous contract, peak E in the weekly. Now, here's something different. I'm sorry. I say a little bit of a breather. This could be a little bit deeper than a momentary pullback in price, because at 1,050, it did at 115, at 1,115. Now it's at 1,051. I think it can test 1,020. If it breaks that, it can go all the way to 1,015. So I'm looking at this and saying 1,021 is the weekly 14-period moving average. So platinum, I'm watching. It has done very well. I just think this could be a little bit more than just a breather. All right. Now, the next question I had was FXI. FXI could be the same thing, taking a bit of a break. So it made a peak. This is a little difficult to see. 31.23, 31.25. So that continues to leg C, peak C. Yeah, made a peak, making a peak D potential today. See how many Ds we've got here? And that just says, you know what? Just be a little careful on the very short term. FXI is the iShares China Large Cap ETF. So that could pull back. If it closes under 30.50, it's at 31.41 right now. In the next 2-3 days, then the 200-period moving average of 29.79 could become a target, but it is still acting really well. Next question I had was, so Jane, so GIII, 3 I's. Type it in over here. Is it the wrong thing? GIII. So I didn't do any work on this because I just saw this late. I don't know why I missed it the other day, Jane. I'm sorry. Let me just check my emails right now, because I seem to be getting emails, but I have different systems. So maybe they go to one and I don't see it. So yeah, I'm looking. I don't see anything, but maybe when the show's finished, suddenly I'll see something. So in the meantime, the question came up about Amazon. I did that. Now we're looking at GIII, and I believe that this is GIII Apparel Group Limited. So I've seen this in some of the apparel sector. These are the little mini ones. Do you remember I mentioned? I mentioned Hanes. That's right. The other day, doing so well. How come? So yeah, we've got A, B. It's making a peak C. I never liked huge gaps like this. I find that I treat it as if you've got to think of it as a short-term trade. When you've got to move like this, when one day you're in the 21 area, 22, and the next day you're down at under 14, you're in the 13s. Well, it's whatever the news was, it's been fulfilled with pushing into the gap very nicely. But look at all these big red candles. I'd avoid this stock. I don't know what you wanted to do with it. It's at 15.33, up down 25 cents. Oh, as a trade, you could do that, sure. But as a position, no, I would avoid this. I mean, let's just check this out. Look at the difference between HBI. I hope it's HBI. Yes, Hanes brand, shirts, underwear, socks. Look at the difference between these two. So something's right. It's at peak D right now, but something's right with this low cap, the low price stock at $8, and your GIII, which is trading at 15. Something's wrong with this chart. So I'd be a little careful. That's all I'm saying to you. A question came in just real quickly. Could I look at my E-mini charts? So I decided that this G/C was in fact a down. I put this in. I've been watching this ever since Friday and Friday after the close, and then Sunday night into Monday. We've seen so many rectangle formations, and the rule of the rectangle formation is if it's a narrow, long rectangle formation, it can continue sideways, and then if it goes to a peak D, E, or F in the breakout above the resistance, that's really important. In this case, it went to a G/C, and I thought with the doji candle soon afterwards and the rectangle and the MACD failing at this particular point right here, let me show you. Look at the difference between the technicals here and the technicals here. Look at that. The stochastic's lower, the MACD's lower, the on-balance volume was good, but the retro strength was failing, the 9 crossed negative. So I was suggesting that was a peak G. But most importantly, the only reason why I thought it was a particular candidate for a short, which is the reason why I did grab that, and that could be just, I could be out in another minute, was because it was a leg D. Finally, you got that leg D in the 10-minute chart, and that just says now it's a little bit more vulnerable. What would I do if I was to do a measured move from left side to the right side? Where do I think it could go? Well, let me just do this right here, and I'll show you what the technical stuff that I do live, because this is the.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me just do this here because I wanted to show you. Look, this was what I was drawing in here for the E-mini live, and I said that it should be pulling back because that is a peak D in the 10-minute chart. But here's what I'd be doing. I'd be doing that right there, and it's actually getting there in a shorter period of time. And that just says there's acceleration down. If you were to take profits, I would be right here at 440.13. I definitely either lower your stop because it's only a 1-minute chart, and the 10 minutes is saying we probably going to have a bit more of a digestive phase today. But just in terms of money management, I'd take something off right now at 412, 413, 4,012, 4,013 E-mini. All right, let's get back to our story. And what I was looking at is Amazon, AMZN, had a fantastic move. I said it looks to me like I can only call it a single leg A up. It's gone above the left side highs. It's really important. It actually closed above that, but I like 2 out of 3 sessions, and that would make a high of the 1st of December at 97.23. Now, a number of people said to me, where would you enter Amazon if it's turned around and this is really an important breakout to the upside? Just have a little patience. I think at the 94s to 92 area, I know that we're looking at this in terms of, I think it was Georgia from Boston, was looking at it, and 84s got in, and the stop held very nicely, and it screamed up to today's high of 98.89. If you're a trader, I would definitely have taken a little bit off right there. Even now at 96.37. Why? Because it's the start of a move, but we don't know if it's a real move or if it's just the daily chart's looking fantastic. The weekly chart is improving, but wow, there's a lot of work to be done. Although the histograms are now positive, that means the MACD is cross positive. But it needs work. That 81.30 low of March of 2020 retested at 81.43, 13 cents higher on the 6th of January. That's important. But at the same time, what I am looking at here is that the overall market is saying we're not really out of the woods. There's still lots of little stories that need to come out that just make the market vulnerable. We've still got some kind of a balance in the dollar, which I'm anticipating, because remember the rule of thumb with the long rectangle formation. Once it breaks down and breaks below the support level, if it happens very quickly, it always wants to just run back to say, hey, I didn't have a chance to say goodbye to Joe. And it runs back up, says goodbye, and then it comes back down again. So that's as it could go. The dollar could go to the 103.30s, 103.40s, and that's just going to give it a little momentary weakness here in the market. Maybe that's why gold could pull back a little bit. But in the meantime, back at the ranch, most importantly, what we're looking at is there are a lot of things. If you go to the IAI, well, let me get to my questions first. IAI, which is the iShares broker dealer and security ETF, in a leg E, possibly a peak E right now as we speak. Fabulous technicals, but at the same time, when you look at the individual stocks in the brokers, it just says, we could have a bit of a breather here. So everything says fabulous action, maybe just time for a little bit of a rest. Now what we're looking at is, the question came in about IRM. IRM, and the IRM is the Iron Mountain REIT. I don't know, Greg, I don't know when this was sent in, but I know I only saw it yesterday I don't know what's going on, why it is with my emails. That sometimes it's right on the dot and sometimes there's a delay. Maybe it's me because I'm looking at my 3 different systems here for emails, all with different, these are different platforms. So what we're looking at here is within the context of, this is peak B in IRM, Iron Mountain Inc. REIT. Everything I read about this, I can't remember offhand, but every time I've seen anything about it, it's been on my list of something to keep in mind as a potential REIT. That's very different. That's very different just a pure stock. There are tax implications, all sorts of things with REITs, but they can act very well. We had CCI once for a fantastic gain, and but we haven't been in for quite a while. But in the meantime, what I am looking at is that it's acted well. I would just give it time. I'm not sure I want to go into a REIT at this particular moment in the marketplace when other areas seem to be wanting to work a little bit better. So in the IYR, if I look at that, that's the REIT ETF. Look at that. That's acting in the daily chart. It's gone to a peak A, B, C, D. Once again, we've got, that's an E. Let me just finish this up here. So this is an E right here, E, uppercase E. Gets a down arrow, sell signal to a double top, U-shaped pattern, comes down, makes a low, and then starts a buy signal that goes to a buy mode, little double bottoms. All these double bottoms I've seen lately, double bottoms and double tops. This becomes A, B, C, and D. I always put a plus sign above the D because that's where you need a little bit of caution, and it could be an instant restart. And the weekly chart is A, B, C. Right here, peak A, uppercase A, B, and leg C until it becomes a peak C, and only a leg A. So the REIT is, that's where that GC went right there. Remove. So this is gray A in the monthly chart. So I think it's an area that you can consider, but IRM is the question. And as I say, I just can't recall off the top of my head what the question was. I'll try to find it again if I can, because I think it was a headline. I can actually do a search just saying IRM. So if you send me emails, just put your symbol right immediately so if I can search for it. So this is, IRM. How can I do this? As a risk reward, I'd prefer at 52.73. Give me a yell if it gets to 51.60. If instead it goes to a higher high today, about 53.26, give me a yell again to say, okay, you might have missed it. I prefer just a little bit of a pullback for risk reward, and then I would start a very small position, about 52. I'm going to tell you right now, 52.20, I'd start a very small position and give me a yell because we need to look at it together. I am going to go to a caller. We have a caller. Do we have a caller? I think.
Can you hear me, Basil?
Yes. Hi, who's this?
This is Phil, Basil.
Hi, how are you?
Fantastic. How was your holiday?
Holiday was really good. Got to play tennis, got to listen to the opera live in HD from the Met on Saturday, did some music, did everything I need to do. How are you doing? How was your holiday?
Fantastic. Didn't sound as fun as yours, but I'll try next year.
Oh, okay. So you want to look at?
SPI, Basil. I appreciate it.
XPI. XPI?
SPI. Sam, Phil, Ivan.
SPI. That's why I didn't get it. SPI. Oh, look at this. SPI is SPI Energy. Okay. So do you have a position?
Yeah, I've been trading this thing for a while. I started getting in around like 90 cents, and I just wanted to see what you think, what it looks like on the chart.
So let me just say, This is not for the faint of heart. This is SPI Energy. It's trading at $1.44. All the technicals of the daily are fabulous. The weekly started to improve. The monthly, I don't know what that huge spike up into the 45 area, and then it closes in the fives. I don't know what that was about. Give me a moment. I'm going to do some notation on it. As soon as we return, we'll be back and looking at SPI. Thank you.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks, and we're looking at SPI for $1.44, up 10 cents. So you've been trading this, and I think that's the best thing that I can say. Since you've been trading it, you understand that the breakout that you've just seen over the last 2.5 weeks is very unusual for this stock. And I'm going to say to you at $1.44, I would take a little bit off, but there's a pattern that I look at, which is the falling axe, where you make lower highs and much lower lows. Then it makes a lopsided cup, like a gravy cup pattern. And that says that by the 25th, that is 25th, will be by the Wednesday next week. There could be a move that takes it to a leg D, but the resistance in the area of 165 from the 15th is going to be very strong. It could pop just a hair above that. And what I'm looking at right now is the technicals are very strong. It's acting almost, the strength that it has is because there's something else going on. I like it very much, and I'm not going to tell you how to trade it because you obviously know very well. What I am going to say is maybe take a little bit off And you can even put that little bit off with a tighter stop if it drops in the next 2 days. It can't break the low of the day, 136. If it gets to 138, you could just add a little bit back. I mean, that is 7 cents in this particular instance. That's a big percentage. And then try to ride it for a C. But it's getting close to the point where it's going to run out of gas on the shorter term. But as I say, it's got about 3 to 5 sessions to get to the high that was made on the 15th of November, and that is 165. If in the interim it starts to break and goes below 132, it says, oops, you got to be really careful. Now, I don't have to tell you that because you can see by the way it falls so quickly. I hope that helps you.
Fantastic, Basil. I appreciate the methodology. I love that I know if I'm wrong right away. Thank you so much.
Thank you for calling. I always appreciate that. So, folks, just as we're about to wrap up, I'm going to wrap it up and say you're going to go to Steve Rhodes and all the rest of the great programming today. I'll be back with Tom a little later. Here's the H pattern in this pattern in the 1 minute chart, and it is a peak D, a sharp pullback. I'll be